welcome to the last panel of our day 2 of Tokenize This. This is our custody of digital assets panel, and we're welcoming all of you here. And particularly, we're thankful to have Stephan from
day so far. Thank you everyone for listening in. I hope you found this all helpful.
And Timo from Swarm. So gentlemen, thank you so much for joining us today and providing your insights on crypto. Why don't you guys go ahead and give us an overview of who you are, how you got into this space, and what each of your firms does.
All right, Stephan, you want to go first?
Yeah, I can go first. Thanks very much for the invitation. And sorry for my technical issues. I think because of me, we are a bit delayed. My background, so I started as a technical engineer as an apprentice within Siemens. And then I moved quickly into banking at some point. And there I went from operations until investment banking. And then in 2022, I joined crypto finance. And there I'm responsible for all the custody related topics, from custody, payments, settlements. These are all the topics which are going over my table. And in the crypto space, I started in 2017. So I started a little bit with trading and trade and hold. And then I started to be a bit doing some DeFi. And so that's why I came more and more into the space. And as I was working with Jan, our CEO, so at UBS, at some point he called me and said, hey, would be nice if he would join. And we had some discussions together. And so that's why I have joined at some point crypto finance. And yeah, that's my small and little journey.
Awesome. Well, thank you for that. Timo, why don't you give us your background and what you guys are working on?
Thanks, Jason. Yeah, great to be here. So yeah, I guess, I'm a techie from the beginning, kind of a computer science guy, right? And started coding really early. And over the years, I built 2 software companies, and then I gradually started moving more and more into financial services. So, over time, I've been with 2 venture capital funds, and I also done a lot of M&A work with software and tech companies and so forth. So I think looking at how I ended up in crypto and blockchain as a space, I was basically having completed the work with one of the venture funds. I moved to Palo Alto to work with a couple of investments of my own. I was kind of really trying to look at what AngelList had built and trying to build something similar, but like a cross-border thing based on kind of allowing European investors to invest in Silicon Valley companies. So I built that first, and then we built a portfolio of companies. And then I set up a SEC licensed firm on behalf of a Nordic investment bank in Palo Alto as well. So I kind of got all the regulatory stuff under wraps and understood how to operate as a regulated entity. And then also one of my investments became a regulated company in Singapore as well by the MAS. So we kind of built a investment banking platform for mid-market private equity deals called Origin. So I was very much looking at how to improve efficiency and using digitization as a means to improve finance in general. And that kind of brought me into the blockchain space eventually. And so, if you live in Palo Alto, there was all these people, Barry Silbert was raising his first money in 2014 for Grayscale and that stuff. And then a lot of the early kind of Ethereum and Augur founders and other people were circulating in that environment. So it's very easy to kind of start tapping into blockchain. And so in 2016, I kind of took a deeper look at it. And then 17 started to spend serious time into the space. And in 2018, we started Swarm in its first iteration. And then 19, we moved it across to Europe and basically set foot in Germany eventually, having kind of evaluated a lot of different jurisdictions. It was kind of really hard to understand what you could build where. We were just very convinced that we couldn't build what we wanted to build in the US. So hence we moved to Europe as a result. And then gradually kind of just set up shop in Germany when they changed the Banking Act. And we got grandfathered into that program under both custody and trading licenses. So yeah, so that's kind of how we ended up where we are today.
Very cool. Some of that narrative, does translate into what you're doing today. It sounds like, you guys are tokenizing some US-based stocks, similar to what you were doing back in the day with the VCs, trying to get some European investors for those Palo Alto companies. So that's really great to hear that translates. I do want to touch on, obviously this is a panel on custody. But before we dive into the nitty gritty, why don't we start with some basics on, what is the purpose of a custodian for those tuning in that maybe are not as familiar? What is a custodian supposed to do for securities and for crypto?
Yeah. So, well, in my view, I mean, obviously, this comes down to safeguarding assets first and foremost. And then, having basically done that as a kind of the most important kind of platform function, then all the auxiliary functions also need to be there, such as, being able to support transactions and asset servicing and stuff like that. So I think, there's a lot of things that kind of from the beginning looks like, oh, it's only like storing, it's basically like cold storage or like, basically the storing of assets. But there's so much more to it once you start looking at what the requirements are on the institutional side. And I guess we'll be diving more into that later on.
Absolutely. Stephan, anything to add?
I think the most important is that the custodian gives trust to the investors. And I think that's the main purpose, because if you don't trust someone, then you don't give them your money. And I think trust is the most important asset of a custodian. And then, of course, it's safekeeping assets for you, if it's crypto, or if it's tokenized securities, if it's traditional finance assets. And then I think more and more it's also giving the trust to the customers that you basically give them or provide them a real in-time and secure life cycle of the processing. If it's transfers to the custodian, transfers outside of the custodian, or are these transactions which are related to a trade, or then comes to also other topics which are kind of reporting, investigations, and so on. I think everything starts with the trust, because when you don't trust someone, you don't give them money, you don't lend a friend of you money, and I think that's the most important asset of a custodian.
Gotcha. So mostly, safekeeping your assets, servicing those assets and transactions, and trust for the investors, which in turn is definitely something positive for the issuer. Obviously, we want to have those investors, be involved. So great. So now we understand what custodians do. What are the differences between custodying crypto and custodying a tokenized security or a security itself?
Yeah, I think, well, at its core, I think obviously the bearer instrument nature of crypto makes it like kind of a special thing to custody. So, the solutions kind of from a technology standpoint look very different when you look at like bearer instruments on chain compared to digitized securities, where you basically have like an owner registry, and it's like there's more recourse to handle different types of situations on the digital security side than it is on the crypto side. So I think those are like the main differences that we see. And then also from a regulatory standpoint, there might be, depending on how you're set up, there are different requirements for that as well.
Stephan, anything on your end? Any differences that you see?
So I get a lot of confronted with these questions from potential clients or also clients. And I come from the global custody in traditional finance. And for me, I think if you store crypto or, let's say, securitized assets, I think the processes are sometimes a bit different. But I think at the end, if you have these securitized assets, at the end, you need to provide all these asset servicing services. You will also provide in the traditional finance. And I think if you're a custodian in TradFi or if you're a custodian in digital, I think at the end you need to be able to process all the edge cases and all the corporate actions, which might come as well then in the securitized or in the digital world. And therefore, I think as a custodian, you need to be able to store crypto and to process them, as well as securitize assets, and also being able to process the the TradFi corporate actions within the tokens. So, or within,
Sure.
the digital assets.
So that's definitely something interesting. It's something that came up from a data perspective, or in one of the previous, I believe, keynotes. Someone mentioned that not everything has to be tokenized, and someone else mentioned the fact that not all data has to be on chain either. Data on chain is definitely great and for multiple purposes, but not all types of data, for whatever reason. So in this case, walk us through the process of a transaction, right, start to finish, and where in there does the custodian fit, and which parts of those services are you providing that are on chain and which parts are off chain? And it very well may be different from both of your perspectives and what services you provide. So I'd love to hear the both versions.
Yeah, I think it might be. I think on so one of the things that we do that not everyone does on the custody side is basically to support like tokenized public stocks and bonds. So that's a very different type of instrument to like a lot of like crypto in itself, first and foremost, but also to like natively issued digital securities. So these are basically depository receipts for an underlying real world asset, being it call it a bond ETF or like a Tesla or Apple stock. So that process looks quite different. So typically what happens is obviously, the transaction flow is such that somebody wants to buy one of these real world assets. And we then basically support that from a USDC deposit point of view on our DeFi infrastructure. It becomes an atomic swap into our smart contract that then triggers off a purchase of the underlying security, given that markets are open. And then that triggers basically, the purchase of that security gets into our traditional securities custodial accounts. And then that, once the purchase has been completed, then that basically signals the kind of a clearing signal to issue the depository receipt token on the other side. And then that whole process is it's very particular for that type of real world asset. And it's something that we've built so that, basically the DeFi world can kind of enjoy these like non-correlated assets that are outside of the crypto ecosystem and then still use them, as we've seen, growing a lot in the last 12 months through MakerDAO and others in the, DeFi ecosystem. And so we think that's a really key building block, because that's one of the ways that we can expand like the universal value in DeFi. So that's kind of one of the things that we're doing that's quite unique to us.
Interesting. Okay, so touching on that, if I am in DeFi, right, let's say I have a bunch of USDC, you're saying I don't have to off ramp onto fiat, go purchase a security. I can do it all via your services, stay on chain, and have this automated process. But you guys also offer US Treasuries, I believe, Timo. So, staying on the theme of like USDC, right, that's what I'm purchasing with. Why would I want a US Treasury instead, or why would I use that?
You can just, like in DeFi terms, you can just look at it as staked cash. So USDC, if you look at that as a US dollar equivalent, basically buying a treasury bond ETF is basically becomes like a staking model for USDC, right? So then you get like the bond ETF yield instead of just holding USDC, where Circle collects all the yield.
Understood. And Stephan, what's your process look like? Which parts are off chain? Which parts are on chain?
At the moment, we don't do DeFi at the moment because our clients, we serve mainly banks in Switzerland, and they are not looking into DeFi. But we are looking into solutions for on and off chain accounts, sub-account structures, where we can serve the clients to make their service to their clients at the end more simple and more structured. There are sometimes somewhere also in the traditional finance, there are some markets which are segregated in the TradFi. So also as we try to serve those markets as well, so we have to look into it how we can segregate on and off chain. That's what we do towards this topic. So, but DeFi is a topic which might come in the future, but at the moment, our client base, which our banks are looking into it, but there are no use cases at the moment which they can follow.
Yeah, And like I said, that's why I said in the beginning, your processes might be different. Again, you maybe have different client bases, which is great. We want to be able to service everyone, and to that end, we have to have those different solutions available. Here in the US, we've seen a couple options. Namely, we saw news come out of BitGo and INX, right? They're starting to work together and have customizable wallet management, right? The idea that your RIA, your family office, or VC funds will have different permissions to be able to access some of those assets, right? So you have like a different role based on role permission based on, what your role is in that transaction. You could be a viewer, a spender, an approver, an administrator, and that comes with different permissions to be able to, again, kind of bridge that gap between on-chain and off-chain servicing and the different components that are involved and different people that are involved in that. So that's something that I've seen here. Fireblocks obviously is doing their own thing as well and getting integrated with other players here in the US on an institutional level. We see a Ripple and Medico as well, working there. And Ripple acquired them. So there's that on the US side. But moving on, all right. So you guys have different things. One of you is a little bit more DeFi. One of us a little more traditional in terms of your client base. But it sounds like you both are working towards institutional adoption of, these assets and custody. So what are some of the considerations you specifically have to take into account when you're working with these institutions? Stephan, maybe you want to start on this
one. I think the first point is integration costs. I think our client base, they serve at the moment clients in the traditional finance. I think for them it's very important to offer or have a crypto offering where they don't need to invest a lot into infrastructure or program endpoints or connectivities. That's why I think we see a lot of developments in the market that banks, they offer crypto or start offering cryptos. But in Switzerland, so we have cantonal banks, which are the smaller banks. We have also larger banks in Switzerland. They already offer crypto. And they look into solutions where they have very low integration costs, but where they can leverage their existing current solutions, let's say e-banking solutions, SWIFT solutions, but also their core banking system where you can just integrate, add crypto, and then start trading and maybe custody or sub-custody as they are currently doing in the traditional asset space. So that's what we are seeing at the moment.
Integrations, low cost. You want to make sure you're keeping your old traditional system, but able to integrate easily with other players that are going to enable and enhance that. All right, so that's interesting.
Yeah,
and
also sorry.
Go ahead.
And what we also see that it's going more away from use cases. So we see a lot of adoption that banks are starting to look at the ecosystem and not anymore looking into, we have a client, he has a use case, maybe we do a project or a POC. So they're moving more and more into what kind of ecosystem do I need to build, which benefits me, maybe also other stakeholders, or also like crypto providers or crypto companies, which offers access to the digital asset space.
Understood. All right. And Timo, how does it look on your side?
Yeah, I would agree that the integration side, I think maybe almost like turning that around. So we kind of experienced that it's really important to be able to integrate and adapt to like whoever, the institutional clients' processes and like however they want to build and deliver their services, that we can fit into that. So I find that that's like a very common requirement. And that's obviously, once you're over and above all the usual kind of checkpoint items that you would have to support regardless, right? So I think that's like one thing. And then obviously account structuring always gets a little bit more complicated when you're dealing with institutional clients and so forth. So I think we've seen that like we're on that side, it becomes a little bit of like a project every time because like, for example, we have this one client that came out of the US that's doing wrapping, and they have a very particular way that we need to integrate with them in order to support their product on the other side. So I think that integration side, and I agree with you, Stephan, they want to keep it at a minimum from especially when it comes from the banking side of things, because that's such a time consuming and slow process if you need to adapt IT systems. But then also on our side, we see that we're pretty nimble and a small organization. So we're, for us, it's relatively easy to almost like, plug some of the gaps from our side and then make it work basically.
Understood. So you guys are both helping enhance some of these processes. You're working with integrations. Obviously, some of these are a little bit more custom than others based on what the bank needs. But I also wanted to ask, are there any specific requirements in terms of licenses or anything specific that you guys have that you really get to leverage to be able to enable some of these institutions to be able to go to the next step here?
Yes, I think on our side, I think the German, the BaFin-based crypto custody license, as well as the transactional licenses, I think that's a critical component as to why, some of our clients have chosen us. I think it's like the passportability across the EU that it provides over time, but also it's interesting that German was so early. We all heard about the MiCA framework being developed, but they were super early on, basically going out there and saying digital assets are regarded as financial instruments, and therefore any activity related to them should be a regulated activity if it's being performed out of Germany. So they were really clear early on in terms of how they wanted to handle this. And I think that's helped a lot. That clarity has actually been quite helpful once you obviously, comply with everything. And it's been, quite a long process to get to that point. But, basically once you're there, then I think it actually helps in acquiring the right type of clients as well.
Yeah, we definitely seen news come out of Germany early on as well. As you know, we track a lot of that news for our show and whatnot. Yeah, Germany's definitely made those headlines and has really been a forward thinker in terms of the clarity of regulation and having those licenses available. So Swarm, great for you guys. How about crypto finance, Stephan? What's it look like in Switzerland, FINMA? What's going on your end?
So Switzerland has very advanced regulation, and FINMA already started early with the DLT law. And that's why we also see a lot of banks coming to Switzerland, also with their subsidiaries to run POCs, but also to start a small crypto offering with their, let's say, subsidiaries or daughter companies in Switzerland. So there we see a lot of movement. Also, that law gives the investors some comfort. Also, it's kind of FINMA is also working towards the staking topic, but also looking into other topics. And we see that a lot of banks in the EU area, like the Germany and the other EU states, countries, a lot of banks in those areas, they look and wait until MiCA is in place. And we were also at Cybos in Toronto, and we had a lot of discussions with a lot of international banks all over the world, but also within Europe. And really MiCA is coming, but until MiCA arrives, a lot of banks are waiting on the sideline until they can start. And we also see that the BaFin is a bit more careful after what happened after FTX. So they really want to understand what's behind the scenes, which also slows down the approval process. And we really hope that MiCA brings a bit more speed into the game, and that the banks can speed up their game as well. That's crypto really starts to move again in all over Europe. I think that's a good thing. And also the passporting topic is very cool, that when you have a license within Europe, within the risk jurisdictions, then that you can passport it as well to other countries. So it's very interesting, but I think we still need to see how the countries react on that.
100%. Yeah. And look, the banks they always have compliance departments that rightfully so, are definitely eager to make sure that, we're being compliant here. We're taking the right steps to either have a proof of concept or to understand how this technology works and have the licenses or partner with someone that has the licenses to move this forward and not have the SEC or whoever our respective regulatory bodies are knocking on our door. From the US perspective, I'll give a couple of points on the security token or the tokenized security side and then your crypto side, but essentially, to have things custodied here, we prefer to use what we call a qualified custodian, right? These are people, entities that have a certain level of license to be able to, custody these. And it could be because of, things that they make sure to check off on a box, a specific license, infrastructure itself. Right. So like, for example, a bank could be a qualified custodian, but we also have special purpose broker dealers that have certain, exceptions and are allowed to do some things with digital assets. You've seen that come out with Prometheum. You've seen it come out with a couple others. But a step above that, even, we have the charter banks. These are, I believe there are only 3 chartered banks that are considered national banks, right? To be able to specifically hold and custody digital assets, those being Paxos, Cortego, and Anchorage. So those are the 3 main ones here in the US. But now from crypto side, in terms of, custodying crypto and having it on your balance sheet, it's something that the banks are not able to do necessarily. And I'll give a point on the crypto side, again, on security token, when it comes to digital assets, you can't custody them directly. You have to go to one of these partner ones. For example, US Bank, we know they use NYDIG as a sub-custodian. Stephan, you touched on sub-custody earlier, right? So essentially a partner that will do this for you. The idea being that you cannot have it on your own balance sheet. Why? Because about a year ago, the SEC came out with a bulletin called 121, essentially saying, hey, if you're going to have something such as a digital asset on your balance sheet, you have your assets and liabilities. You'll have it on your liabilities as, call it Bitcoin, for example. Hey, we have this much Bitcoin. You cannot have it in the same Bitcoin terms on your asset side. And so that creates, an imbalance. And they did not necessarily provide clarity into how do we account for these? How do we appropriately do this? So that's something that the banks right now are struggling with. They've talked to, multiple consultants. I just had a conversation a month ago with Deloitte here in Chicago, or when I was in Chicago visiting. And same thing, they still don't know a year later how to advise these banks on what next steps are. So in terms of regulation, I think that, some of the other countries are actually a little bit more advanced in terms of clarity, what you can and cannot do, licenses you can have, and what next steps forward look like. But did want to shine a little bit of light onto what the US looks like. So we have the qualified custodians based on licenses, based on, what they have going. And then you have the opposite end with crypto in terms of, where you can and cannot custody that for your balance sheet. We are about to come up on time though. So I do want to take the time to, give you guys an opportunity to tell us about any exciting assets that you guys see being tokenized, whether it's yourselves or your clients. And, what advantages you guys have for institutions that they'll be able to leverage, and why should they be working with each of you?
Okay, I think, if I kick off there, I think we're obviously super excited about the real world asset stuff that we built with the tokenized bond ETFs and the stocks. We think that the ability to handle both crypto as well as tokenized assets, real world assets, we think that's critical going forward, because as we build more and more bridges between TradFi and DeFi, we think that, like, in the end, once everything gets digitized, someday, right? And then you kind of need to be able to support pretty much everything and all types of assets. So I think that's a critical component to build towards. Not to say that we're anywhere close to that yet, but it's directionally, it's something that we're, trying to provide a unique value proposition around, so that you can start constructing portfolios that are basically cross DeFi and TradFi, and then kind of move seamlessly between those two worlds. So I think that's critical, and we're excited about that. And then there's some more things like on the regulatory arbitrage side that we're really excited about. Like, for example, this customer of ours called Wrap.com that's doing a bunch of crypto asset bridging across different blockchains. They basically decided to run that operation out of their European company, where we are basically the custody provider for that service. And they just didn't feel like it was clear enough as to what they could or couldn't do in the US. So they decided to move it elsewhere. And that was just like one out of many examples of, in this case, a live client that we have, but also a lot of conversations that we've had with US-based companies that have basically looked for a jurisdiction that is, number one, credible and provides the trust, the trust structure that Stephan mentioned, but also, allows us to operate the types of, services that they need. So I think that is like the regulatory arbitrage combined with like actually building more and more bridges between TradFi and DeFi. That's our mission and our path.
Very interesting. Yeah, we've heard of some companies considering moving overseas or having subsidiaries overseas to again test some of these things out. Stephan, how about yourself?
I would say I totally agree with Timo. As I come from the traditional finance, so I also tried to make the bridge between traditional finance and digital assets. And I think the first thing is for the end investor, it needs to become more easy to access crypto. Let's say to open a wallet, to maybe store the 12 keywords to access the own wallet again. Public-private keys access. I think this needs to become more simple. And then I would say then it's very open. So we can have stocks, we can have bonds, we can have funds, we can securitize or tokenize real world assets like art, which can come more potentially like soccer players, for example. I think what also is like real estate could be a very interesting topic where you can, in between finance, so you buy a real estate, you tokenize real estate because you need money to build or renovate the building. So I think there are a lot of use cases also with the hedge funds where they go through the transfer agents, which maybe you still send fax statements around in the fund industry. So I think there are a lot of use cases which can get automated. We can improve the process with the blockchain. And also I think when we see the case with Credit Suisse and UBS in Switzerland, so where investors withdraw their cash or securities or transfer them out. So I think when you see that your assets are secure and segregated in a wallet within the custodian, you have access to that wallet, for example, from the outside through a sophisticated system the custodian provides. So you really see that your assets are secure and safe, which also gives a benefit and also then circles back to the trust. I think there are a lot of use cases, but I think in general, the crypto industry is still young, needs to evolve and mature, and the access for the normal investor needs to get more simple in the future. And I think we should work towards that. And then I think the people get more used to it, and then they feel like, oh, I want to explore more, and I want to buy a piece of whatever token-based asset, for example.
Got it. All righty. So it all comes full circle, right? We're looking at, how do we best safeguard these assets? How do we, bring trust to the Web3 world, right? And to investors, knowing that you guys can interact with each other, both TradFi and DeFi, and bridging those gaps, as well as for the institutions, providing some tools for them to be able to participate as well. But keeping in mind, we want to be as compliant as possible. And of course, that does come with stipulations based on jurisdiction, where we're based on what kinds of assets we're working with, et cetera. All righty. Well, thank you both for your time and your insights and for sharing them with our audience here. For the audience, we'll see you in the closing remarks, which will be the next session. Thank you all. Have a great day.
Thanks, Jason.
Thank you, Jason. Bye-bye.
Bye.